Imagine a seasoned investor who puts $50,000 into a failing tech startup because he convinced himself the temporary dip was just market noise. He ignores every single balance sheet warning sign while clinging to two obscure online articles that promise a massive turnaround by the end of the fiscal year. You have likely done something very similar with your own hard-earned money, your career decisions, or even your personal relationships without realizing what was happening. What if I told you that your brain is actively sabotaging your financial life by filtering out the truth just to protect your fragile ego from being proven wrong? Cognitive psychologists have spent over 6 decades studying this exact mental flaw, and the actual findings reveal why smart people continuously make disastrous economic choices. I break down one deep psychological concept per video to help you make smarter decisions. So subscribe right now and turn on notifications to master your mind. Back in 1960, a brilliant psychologist named Peter Wason performed a simple experiment at University College London that fundamentally changed our understanding of human decision-making. Wason gave participants a sequence of 3 numbers, 2, 4, and 6, and asked them to figure out the hidden rule used to generate that sequence. They were allowed to test their own combinations of 3 numbers, and the experimenter would simply tell them if their proposed sequence followed the secret rule or not. Almost every single participant assumed the hidden rule was simply increasing even numbers, so they tested 8, 10, 12, and immediately felt confident about their answer. But Wason told them they were wrong, because the actual rule was simply any 3 numbers listed in ascending order, such as 1, 5, and 900. The participants failed because they only tested sequence combinations that proved their initial hypothesis, instead of actively trying to falsify their own working theory. This fundamental psychological flaw is officially known as confirmation bias, and it explains why your brain routinely rejects cold, hard facts to defend your previous mistakes. When you form a belief about a stock, a business partner, or a career path, your brain treats that belief like valuable physical property that must be defended. Instead of acting like an objective detective gathering neutral evidence, your mind operates like an aggressive defense attorney who ignores all evidence that contradicts the target client. Before I show you the most shocking part about how modern algorithms exploit this mental flaw, let us look at how this mechanism actually works inside your brain. Think about the last time you bought an expensive gadget or made a high-risk financial investment that immediately began to drop in value after your purchase. Did you search the internet for unbiased expert reviews, or did you specifically look for forum threads where other buyers confirmed that your purchase was still smart? In 1979, researchers at Stanford University conducted a landmark study led by Charles Lord that revealed the dark reality of how humans handle opposing information. They gathered 2 groups of people with strong, opposing views on the death penalty and handed both groups 2 identical, highly detailed academic research reports on deterrent rates. One report contained data suggesting capital punishment lowered crime, while the second report contained equally compelling statistical data showing that capital punishment had 0 measurable effect. You might expect that reading 2 balanced, contradictory reports would cause both groups to moderate their extreme views and meet somewhere in the thoughtful middle ground. But the researchers discovered the exact opposite occurred, as both groups picked apart the methodology of the opposing study while celebrating the study that agreed with them. After reading the exact same objective evidence, both groups actually became significantly more polarized and far more extreme in their original beliefs than they were before the study. The name for this terrifying cognitive phenomenon is motivated reasoning, and it proves that introducing facts to an argument often makes people double down on their original error. Your brain literally releases small doses of pleasure chemicals, like dopamine, whenever you find information that agrees with your worldview, making bias feel physically satisfying. Conversely, encountering evidence that proves you made an expensive error triggers the exact same neural pain responses as physical discomfort, so your mind instinctively avoids that distress. This brings us to the second layer of the trap, which explains why smart, well-educated people actually fall victim to confirmation bias much more often than average individuals. High intelligence simply gives you a greater capacity to invent clever justifications and rationalize bad decisions that lower intelligence people would accept as plain failures. Wall Street retail investors lose billions of dollars every single year because they fall in love with a declining stock position and refuse to set a mechanical stop-loss order. They will read 50 negative financial statements and call them biased noise. But the moment one random blogger writes a positive review, they use it to justify buying more shares. Major corporations understand this human vulnerability intimately well, and they engineer modern social media algorithms to feed your specific confirmation bias for maximum engagement. Tech platforms track every millisecond of your attention span, learning precisely which narrative comfortable truths make you stay online longer, so they can deliver identical content continuously. They create digital echo chambers that reinforce your existing economic, political, and personal beliefs, making you feel completely infallible while quietly locking you into an ideological prison. Stay with me, because what I am about to show you in the next 2 minutes is the exact psychological mechanism that turns confirmation bias into financial ruin. When confirmation bias combines with money, it creates a dangerous behavioral cycle known in behavioral finance as the escalation of commitment, or sunk cost fallacy. Once you invest time, effort, or capital into a venture, admitting a mistake feels like an unbearable hit to your identity, so you spend even more money trying to prove you were right. A real estate speculator buys a property that requires endless repairs, ignores the collapsing local market, and keeps throwing savings into the project just to avoid admitting defeat. He convinces himself that the market is wrong, that the neighborhood will recover, and that everyone warning him to cut his losses simply lacks his visionary strategic foresight. So now you see the dark reality of how this mental bug works in every single area of your daily existence, quietly tax collecting your wealth and stalling your career growth. Every time you check your investment portfolio, every time you argue with your partner, and every time you defend a bad decision at work, confirmation bias is driving the vehicle. You are constantly running a filtered simulation of reality where you are always right, while your bank account and personal life pay the steep hidden price of that comfortable illusion. But here is the empowering part of human psychology, because once you understand how this cognitive trap functions, you can build reliable systems to completely bypass your own ego. Munger famously stated that you do not truly own an opinion unless you can state the opposing argument better than the people who actually hold that opposing position themselves. To protect your life and your capital from confirmation bias, you must adopt a formal decision framework called Red Teaming, which military commanders use before launching critical missions. Whenever you are about to make a major financial or life decision, assign a trusted friend or colleague to act as an aggressive adversary whose sole job is to destroy your plan. Ask them to uncover every flaw, highlight every missed risk, and present the absolute strongest case for why your proposed decision will fail completely and cost you money. If your plan survives that rigorous adversary test without relying on wishful thinking, you can move forward with genuine confidence grounded in cold reality rather than emotional comfort. Another actionable practical rule is the inversion technique, where you stop asking how to succeed and start asking what specific errors would guarantee your total failure in this scenario. If you want to build a successful business, list every bad choice that would guarantee bankruptcy within 12 months, then systematically audit your daily behavior to eliminate those exact actions. By actively hunting for potential points of failure, you force your brain to break out of confirmation bias and observe reality through an objective, unvarnished, analytical lens. So let us pull all of these critical insights together into a simple framework that you can apply immediately to protect your wealth, your decisions, and your future success. First, recognize that your brain is naturally lazy and will always prefer comfortable lies that confirm your current beliefs over painful truths that force you to admit expensive mistakes. Second, remember Peter Wason's experiment and understand that proving yourself wrong is the only scientifically valid method for determining whether your decisions are grounded in absolute reality. Third, realize that smart people are especially vulnerable to this trap because they use their high intelligence to invent convincing excuses rather than facing cold, hard statistical evidence directly. Fourth, implement red teaming and the inversion technique before making any major career or financial move, so you kill bad ideas before those bad ideas destroy your savings balance. When you learn to welcome the pain of being proven wrong, you trade fragile ego protection for long-term compounding success in every single area of your financial and personal life. Subscribe to the channel right now if you want to continue upgrading your mental software and mastering the hidden psychological forces that govern your behavior, money, and choices. Share this video immediately with one friend who deserves to understand how their brain works, because having one honest conversation about confirmation bias can save you both years of costly mistakes.